Are you a tax resident in Kenya or a non-resident? The answer determines how much tax we pay. Here is what KRA looks at. You don't have to live in Kenya full-time to be taxed by KRA. And sometimes, even if you live in Kenya, you could still be a non-resident for tax purposes. Let's see how this works. So what is tax residency? Tax residency is about where you live, how long you stay, and your connection to Kenya. Citizenship does not determine tax residency. Even non-Kenyans can be residents if they meet the conditions, and Kenyans can be non-residents if they don't. So who is a tax resident? This applies to both Kenyans and non-Kenyans living in Kenya. You are a resident if you have a permanent home in Kenya. For example, Jane lives in her family home in Nairobi, but travels often to Canada for work. Anna from the UK moves to Nairobi, rents an apartment, and stays 200 days this year. She is a resident, and she'll be taxed on worldwide income. So in that scenario, that person is a resident. Example 2, you are also a resident if you stay in Kenya 183 days or more in an year. For example, Peter works in Kenya for 8 months a year, even though he spends 4 months in the UK. Another example, David from South Africa works in Nairobi for a 2-year project and maintains her home in Kenya. That is a resident, and they are taxed on worldwide income. So in those scenarios, those people have stayed in Kenya for more than 183 days in a year. Finally, you are a tax resident if you stay an average of 122 days over 3 years. For example, Lucy splits her time between Kenya and Rwanda, but her 3-year average in Kenya is 130 days per year. So that person becomes a resident. So it is important to note you only need one of the 3 conditions I have mentioned to qualify as a tax resident. And your days in Kenya do not have to be continuous. Travel in and out and the count still matters. So who is a non-resident? Number 1, non-residents are people who do not meet any of the residency conditions I have mentioned earlier. For example, Michael lives in the US and only comes to Kenya for 1 to 2 weeks per year. That person is a non-resident. Number 2, or example 2, John from Canada comes to Nairobi for 1 month training. During that time, he is paid a Kenya-sourced training allowance. So since this person is a non-resident, they are only taxed on the income earned in Kenya, not on his Canadian salary. Number 2, non-residents also include people who live and work mainly outside Kenya. For example, Sarah works for a Nairobi company but is posted in South Africa for 2 years. So in that case, Sarah has not been in Kenya at any given time. Finally, remember, non-residents get taxed only on the Kenya-sourced income. For example, Michael earns rent from his Nairobi apartment. He pays tax only on this Kenya-sourced rent, not on his US salary. So why does knowing the differences matter? Knowing your residency status is important because it determines how your income is taxed. It shows whether foreign income is taxable. It affects the withholding tax treatment, and it also helps avoid penalties or errors when filing your returns. So when filing your returns on iTax, you must select your status as either resident or non-resident. Choosing the wrong option can lead to errors or penalties. For example, Lucy mistakenly selected non-resident but has been in Kenya for 200 days. So KRA flagged her return as incorrect. So one common mistake people do is selecting a status without confirming their tax residency. Always check your days, permanent home, and presence in Kenya before choosing your tax residency status. So before filing your returns or signing any contracts, confirm your tax residency status. Next, we will look at how KRA now cross-checks your information to ensure compliance. So for more tax updates, make sure that you subscribe so that you don't miss out on our next episode. Thank you for watching and see you in my next video.